Hi, this is Christie Cannon with the Christie Cannon team at Keller Williams. We wanted to make sure that you are in the know, so if you're thinking of selling, a potential seller, we have some great information that we want to share with you as to why it is not the time to wait. This actually might be the perfect time to get your home on the market. Why is that? Well, consumer confidence going into 2017 is very strong, and it looks like it's continuing that way. Lynn Franco, the Director of Economic Indicators, said this: consumer confidence increased in February and remains at a 15-year high. Consumers rated current business and labor market conditions more favorably this month than in January. Expectations improved regarding the short-term outlook for business and, to a little lesser degree, jobs and income prospects. Overall, consumers expect the economy to continue expanding in the months ahead. And whenever people are confident with the economy, they're confident about spending money. So if you're confident about spending money, then we know housing is going to do very, very well. As a matter of fact, Ralph McLaughlin, the chief economist at Trulia, said this: driven in part by a healthy economy and near historic low inventory, the U.S. housing market is showing signs of picking up steam. Home price increases in December were the largest in 2.5 years, and home buyers should expect a quickening of price gains to persist this spring buying season. So, what is that about? While consumer confidence is good, people are spending money. There's more of a demand for housing. Supply is still constricted, and what does that mean? Prices are rising. The Case-Shiller year-over-year price changes for the 20-city composite had started to see a little bit of a blip up. What it came down to was about a 5% year-over-year gain, and that's the little yellow line going all the way across. But we're seeing that it now is starting to jump to about every other month, and it seems for the last 3 months over that 5% year-over-year gain. So what we're seeing right now is normal appreciation. Normal appreciation is about 3.6% historically, but we're still for a long, long time, many months now, over that 5%, and I don't think it's going to lighten up. CoreLogic just put out the report. If you look at the year-over-year percentage in price change by state, across the United States, the average was 7.2, so that's double the historic norm. That's what happened in the last year, and we really don't see that changing dramatically. It might fall some, and we will still see prices increasing, but there is no talk by anyone about prices falling. This next slide is quarter over quarter, and we can see where they are from one quarter to the next quarter. And then CoreLogic gives us a month-over-month percent change. So if you're taking a look at the month-over-month, you can see whether that velocity is up or down. That's just for 1 month, the last month. And we can see that across the United States, it's 0.8%. Now, if we multiply 0.8% by 12, we're looking at an annual rate of over 9%. I don't think that's going to happen, but that's what's happening right now because there's such a shortage of inventory and such high demand. The Home Price Expectations Survey is a quarterly survey of a panel of over 100 economists, real estate experts, and investment and market strategists. And they're asked, what is going to happen with prices over the next 5 years? So let's look at some historical perspective on this. So between 1987 and 1999, the normal annual appreciation in the country was 3.6%. During that time, right after, it almost doubled to 7.1%. During the bust, the years of the bust, on an annual basis, prices fell 5.4%. And since the recovery of January of 2012 through December of 2016, the annual appreciation rate has been about 5%. So what we're looking at a market that has recovered. The experts are projecting that over the next 5 years, 2017, we're going to be a little below the 5%, still above the 3.6%, but below the 5% we've been seeing. Then over the next couple of years, it may slow up a little bit. However, in our area, I think we're going to be fairly well protected only because we have such an influx of growth in our area. I think the main thing here to look at is that no one is projecting prices are going to fall. That's across the nation. Across the nation, it is still projected to increase year over year through 2021. If we take a closer look at the cumulative house appreciation projected through 2021, you'll see that the bulls in the survey, the most optimistic, see that it could be up well over 25%. And the bottom, even the most pessimistic experts think that prices will be up at least 6.3%. Here, CoreLogic provided us some great information and forecasted the year-over-year percent change in price by state. Now, since every single expert is saying that home prices are going to continue to appreciate, what you're going to hear on the other side is that interest rates are going to go up, which is going to curtail the housing market. Andrew Leventis, the FHFA Deputy Chief Economist, stated this: although interest rates rose sharply during the fourth quarter, our data shows no signs of a home price slowdown. Although it will certainly take more time for the full effects of the elevated interest rates to be felt, there is no evidence of a normalization in the unusually low inventories of homes available for sale, which has been the primary force behind the extraordinary price gain. So, sales are up. As you can see, average days on the market, we are still holding true to under 30 days for homes listed. Keep in mind, this average days on market is just that. It's an average. Cities are going to vary, neighborhoods are going to vary, and homes are going to vary, as well as price ranges. So let us help you navigate this process. Give us a call today. We would love to assist you. The Christie Cannon team, 972-215-7747. Again, 972-215-7747, your leading industry experts in the real estate market.